The market's been on fire lately. Tech stocks going up, AI startups raising crazy money, but underneath there are big signs. And if you're not paying attention, you could be heavily invested when the market drops. Are we about to witness the next big market crash? What if we're about to lose everything? Here are 5 signs that we're heading into a crash. Reason number 1. Gold is going parabolic. Let's start with gold. The price of gold has been on fire, up nearly 50% this year. That's not normal. Investors usually pile into gold when they're scared. Scared of inflation, scared of war. And right now they're buying gold like it's the apocalypse. Even billionaires like Ken Griffin are worried. It's not just retail investors. Bottom line, when gold moves like this, it's often a sign that big money sees trouble coming. Reason number 2, the market looks strong, but it actually isn't. On the surface, the market looks great. The S&P 500 is near record highs, but underneath, it's weak. Only a handful of big tech stocks are pulling the whole thing up. In fact, on one recent day, nearly 400 out of the 500 S&P 500s went down. But the index still closed up. That's wild. And that equal weighted S&P 500, it's below its 50-day moving average. That's a warning sign. Historically, when only a few stocks lead and the rest of the market lags, a correction usually follows. Reason number 3, insider panic. Now here's the juicy part. Insiders are selling like crazy. We're talking CEOs and top execs, the people who know their companies inside and out. Right now, the sell-to-buy ratio is over 17-1. That's the highest it's been since the 1970s. To put that into perspective, back in 2007, right before the crash, the ratio was 16-1, which was lower. When insiders dump this much stock, it usually means one thing. They think the market's overpriced and something bad is about to come. Reason number 4, global tensions. Next up, the world is on edge. We've got wars in Ukraine and the Middle East. We've got US-China tensions boiling again, with sudden trade threats wiping out trillions in value in just a few days. Even the IMF, yes, the International Monetary Fund, is warning that markets might be too chill right now. They say if something breaks, politically, economically, whatever, it could trigger a disorderly correction. Translation, markets could fall fast and harder. Reason number 5, bond market is screaming. And finally, let's talk bonds. Bond yields have been skyrocketing this year. That's a big deal because when yields go up, stocks usually go down. Why? Because it gets more expensive for companies to borrow and less attractive to buy risky stocks. It's like gravity. Rising rates pull stock prices back to earth. Some analysts say the bond market is already under serious stress. If yields spike again, we could see a big hit to stocks.